Good morning, everyone, and welcome to the PivotBoss pre-market video for Thursday, September 7th, 2023. I am Frank Ochoa, aka PivotBoss. Happy Thursday, everyone. Real quickly here, jumping over to pivotboss.com/events. We're still moving on with our PivotBoss Premium Bootcamp here. Day 3 is upon us. We've already locked in the MGR signal, the extreme reversal signal. Two great presentations here over the last couple of days, recorded for our members and ready for playback. Additionally, today we're going with wick reversal. It's going to be one of our foundational rejection signals that we use, all time frames. Again, another great presentation here today for our members. If you're not a member, you can jump into this training still. There's still time here. You can click up here to jump into our trading room free for 1 month. And you're going to get a ton of goodies along the way. If you look down here as well, we're going to be jumping into Masters next week. So next week, this is our Masters schedule. Again, a ton of great content here for our Masters members. If you're not a Masters member, I highly encourage you to jump into Masters as well as we move into next week. So a lot of great content coming your way. Again, today we're going to be focusing on the wick reversal at 11 a.m. Central Time. So join us then. All right, let's take a look here at the markets. Right now, one of the things that's very clear here is that we have seen a full-on downside break from the 4-day narrow range. We quantified this 4-day narrow range a couple of days ago and mentioned that there could be about 120 to 140 points of range that could be seen up ahead once a breakout occurs. The breakdown occurred here on that day, so we can take the high of this day and forecast lower 120 points. That's going to take us from 45, what is this, 45.03, where you're looking at 83 here as the next target. So 43.83 on a 100-point move from here down. If you look at, rather 120-point move down. If we see about 140, then you're going to see a little bit lower into about 43.63 or so as the downside target. So the next pullback could be seen as an opportunity to sell it. We have failed through the previous month's midpoint, so any pullback here could be sold for a continuation into the downside target ahead. Now that's just a 4-day range calculation, but anytime you fail at the previous month's mid, it opens up the potential for a full-on retest at the previous month's low price. So we could be looking as low as 43.50 up ahead. As of right now, we do have pre-market economic data points coming out in a little while. Initial jobless claims, non-farm productivity, unit labor costs coming out. FOMC member Harker speaks at 9 a.m. Central. And today, since it was a holiday shortened week, we get crude oil inventories at 10 a.m. Central. The afternoon is also filled with FOMC members speaking, so there could be some headline risk there. Friday is going to be relatively quiet from a headline economic data point standpoint. So right now, again, the fact that we've broken down hard through the previous month's mid suggests a bit more downside ahead. Any pullback could still be a selling opportunity until proven otherwise. Taking a look at the NQ, you'll see right here NQ also breaking a narrow range to the downside here. This one's looking at about 600 to 700 points of range. And again, if you're taking it from the breakdown point, we can forecast from this high all the way down and see how far we go. The high yesterday here, right at the previous month's close price, was 15,530, and again, we're looking at about 600 points to about 700 points, somewhere in that zone of range. Let's just call it a cool 600. So if we're looking at yesterday's high here of 15,530, then minus 600 points is going to take you to about 14.9. 14.9 here could be in play. So that's the zone here that could easily be the next target down, 14.9 in that zone. And then again, this midpoint is going to be very important. How does the market respond to that mid? That's the previous month's midpoint. Previous month's close here so far rejected and down into it. And if bulls can defend here, if we can find a strong rejection down here, perhaps we can see a move to the upside. Target up ahead, which would be the previous month's high. A failure here, and that opens up the continuation down. So while the ES has seen quite a bit more weakness and fundamental breakdown through the previous month's midpoint, the NQ still has not yet broken through that mid. So there could still be some sort of reaction here that saves this down move at the moment. All right, let's take a look here at crude oil. Now, crude has been super bullish here lately. It shook off weakness. It has rotated higher, especially behind some strong failed new lows, outside days up. Got some breakouts through narrow range and big time expansion. We are now holding above the 85 level, holding above the 84 edge, and sitting at highs inside day at the moment. Very narrow inside day, 46% of average, 96 ticks of range. Given the upward move here, given the upward flow of the trend, the PIMA trigger zone, the 8-period average, all of that, this market has given itself enough room to run to the upside, where even if it pulled back deep, even if we retested 83.50 on a deep pullback, bulls still have the upper hand right now for a continuation up. So as we've mentioned before, 84 is going to be our major transitional level. That's the key range edge, or not the market structure edge. You have 74 as the middle and then 64 as the bottom. The next level up would be 94. So to stay through the 84s and to hold 84s on a retest opens up 94 up above. So we could still be headed much higher. The next move will be very important. If we do get some sort of push downward, watch for a follow-up reaction that could open up the next levels above. Looking at gold futures, this one right here has been flowing downward from the middle of its range. Again, it has a range that basically spans 2,000 on the upside and 1,900 on the downside, and you have that middle zone, 1950, call it, maybe 1960, in that zone right there. And in this middle area, there's been a lot of chop here, and we were in this zone here. At the edges, there's been a bit more rotation back down or back up, and right now we're kind of coming out of the middle. So are we going to make a move to an edge? And if so, does that edge lead to another rotation back up within the range? So right now, working our way downward at the moment. A bit of rejection to begin the month. Nice retest and follow through on day 2, and then a failure at the previous month's midpoint. So the fail at the previous month's mid, when the close was closed to the mid, opens up a move to an edge. It's one edge or the other edge, and right now making a move downward. So any pullback could be seen as an opportunity for bears to defend for a continuation downward here toward that previous month's low up ahead. So even a bounce here into the previous month's midpoint could be used as an opportunity for bears to defend and sell until proven otherwise. Now keep in mind, gold hasn't been the best in terms of overall directional conviction. It's been back and forth here. So when it reaches the edge, it could bounce right back up until we're ready to move out of this larger range. All right, lastly here, looking at the YM. The YM has been on a path lower here in the near term. It has reached the midpoint of the key range. It's now a key range 619, 34,619 on this day right here when it developed a strong high outside day down. We mentioned that that's a good bookend high to this bookend low, and if we reach the midpoint, we have ourselves a new key range. So the odds of reaching that key range were good. We got there. The next day was a pullback and then drop into the range over the last couple of days. Now that we have that range, we have ourselves some very good key levels to watch. In a bullish scenario, you would look for price to come down below this key range low and look to trap and reverse back up. That could be a play that plays out here up ahead. If there is a failure at this area, say we get down here and we can't push back up, then we may be looking at downward targets. 33.5 and 32.9 would be the next downside targets ahead in that case. So again, we have ourselves a key range with great edges to watch. As of right now, still flowing lower. And again, any pullback could be a selling opportunity until proven otherwise. Pre-market economic data here could provide some punch here at just ahead of the RTH open, so keep an eye on that. All right, we'll be back at it again in the trading room later on today. We have day 3 of our premium boot camp. Please be sure to join us for that training. Everyone have a fantastic rest of your morning, and I'll see you in the room. Take care.